taking a bit of a pause on the conversation. I'm going to bring in Gautam Sarogi for a corporate conversation, corporate voice joining us here on Closing Trades. Founder and CEO, Go Colors. Gautam, great having you as we always do at this time, at this hour post your earnings. Just give us a sense, Gautam, this decline with regard to EBITDA, what's playing out, at least on that number, if you can give us some color, because revenue largely is flat YOY.
Yeah, hi, good afternoon. Thank you for having me on the show. See, I think EBITDA fall is largely because of one-time exceptional expenditure what we have in our P&L, which is relating to store closures. So we had 60 plus store closures this quarter, which we had guided earlier. And when we had shut those stores, there were some capex write-offs to the tune of 6.5 crores, which has deeply impacted our EBITDA margins. So if I look at EBITDA margins before this exceptional line item, then I would say more or less it's more or less in line with what our EBITDA margins were last year during Q1. As far as revenue is concerned, I think I think revenue has been flat, but our main channel, which is EBO and LFS, has grown at about 2 to 3%, where we've also reported same-store sales growth of 0.6%, where we were negative same-store sales growth for many quarters now. This is the first quarter after several quarters where we have reported positive same-store sales growth. So I think the momentum is good, and I think we are going to be looking at good positive quarters to come.
So Gautam, that sets us up beautifully for the rest of the conversation. With regard to the store closures, just give us a sense, how much are we through with, how much still to go? And in terms of a timeline, how quickly do you start to rejig or kind of restructure the business? How quickly does the restructured business start to pick up steam?
Yeah, so I think, we've been doing this transition and restructuring for quite some time now. I would say a very large portion of our transition from smaller stores to larger stores has happened. These stores, what we have shut, were largely small in nature, so a good chunk has been completed. I think there are going to be still some closures ahead of us. We are at the end of it, but there are still going to be some closures ahead of us. So I think from a business perspective, you will start seeing some positive green shoots in the business starting Q3. So in Q2 also, there will be some consolidation. I think by the time we hit the festive quarter, by Q3, there should be a significant improvement in the metrics of the business compared to how it was last year in Q3.
And Gautam, at the end of Q4, my research analyst Pratik tells me that you had guided for 50 store closures. You've done 66. So the pace is much faster, I believe. So Q2 also will be a little bit quicker, or have you front-ended the store closures?
No, see, I think in the 66, what has happened, what you said was absolutely right. 55 stores was our guidance, but we also got some opportunities where we relocated some of our existing stores from one part of the market to another part of the market. See, relocations usually is part of the business which happens where brands move from one good location to a better locations. So the delta difference between the 55 and the 66 are those relocations, and that's why the number was higher. As far as Q2 is concerned, Q2 is not going to see the same kind of consolidation what you saw in Q1 or the earlier quarters. The closures are going to be much lesser.
And Gautam, how should one look at the impact of that on SSSG? Because I believe that some part of that would be impacting your same-store sales growth. So on the stores that you intend to continue to run Q3 onwards, what's the kind of SSSG growth that you've clocked? Just to give our viewers that perspective, that focusing on the core, what will it lead to in terms of growth?
See, it's very difficult to guide what our SSSG would be in Q3. But having said that, I think, when the small stores close, that business eventually moves to the larger stores, which will also reflect in SSSG. But that movement of business from the smaller stores to the larger stores does not happen immediately. It happens over a period of time. So it's very difficult to give an estimate of where our SSSG would be in Q3. But the idea obviously is to improve from where we are currently today.
And talk to us about ASPs. How are they trending? What's the last 1 year trend looking like? And how's the outlook looking from an average selling price perspective?
See, we as a brand have been premiumizing our products. We are very relatable to all income segments as a brand, and our ASP usually grows at about 4 to 5%. This time we saw about 6-7% jump in our ASP. I think it was 8% ASP jump. But on a steady state basis, I think our ASP on a YOY, our ASP will increase at about 4 to 5%.
Okay, 4 to 5% typically YOY.
Yeah.
How's demand traction shaping up for you, Gautam? Q1. How's footfalls playing out? What are the various channels? How are each of the channels doing in terms of sales?
See, I think, look, demand has been better than what it was earlier. Definitely, we have seen an increase in footfalls. Of course, our numbers don't really reflect how demand is because we are going through a transition. But otherwise, from what I see in the market, I think demand has been fairly better than the earlier quarters. And we are positive and hopeful that demand will continue and keep speed in the coming quarters as well.
Store mechanics, Gautam, last off, how much does a new store require in terms of capex? How quickly do you break even? Some of those metrics, if you can give some color.
Yeah, sure. See, usually, typically, when we open a new store, the capex would range anywhere between 20 to 25 lakhs, and overall investment in a store would be 40 lakhs or a little more. Our average store does about 80 to 90 lakhs a year with an average EBITDA throughput of more than 20-25%. So I think from a payback period and ROI perspective, see, earlier our ROIs were around 15 months. Now probably it's at about 18 months. So very, very healthy unit economics. So when we are also opening the slightly larger stores, it will carry the same unit economics of what the smaller store followed.
I'm not seeing growth on the top line, right? Does that start to kick through only Q3? Is that when I start seeing that growth number kick through for you?
No, see, unfortunately, it's very difficult to predict, what kind of growth levels we will be at. But the kind of initiatives what we have taken in the business, it's giving us a lot of positive results. So I would say, I would put it differently. I think what we will see in quarter 3 is a good improvement from where we were last year. I think that's the right statement. From a exact number guidance perspective, it's a little difficult to predict.
No, sure. Thank you so much, though, Gautam, for coming in and speaking to us. And, wishing you all the very best with regard to the pivots you're making over the next quarter or two.